Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Teaching Tech Tuesday today. Let's take a look at some long-term Ethereum models, price targets, ways to think about ETH. This cycle, for those of you who are unaware or have not heard, there's been a complete 180 in US crypto regulatory policy, likely politically driven. We've gone from almost certainly not getting an ETH ETF to almost certainly getting an ETH ETF. Hence, the large move that was not priced in yesterday, plus 20%. So now's a good time to bring back these charts and have a look. I know a lot of people are thinking about asking about ETH again. Keep in mind, these ETH ETF products probably will not be staked initially. We do not know the fees initially. Flows will likely be unimpressive initially. If you think about selling ETH versus BTC, if you are the salesperson for BlackRock, for example, it may be difficult to differentiate between the two. And I would argue difficult to allocate heavily into ETH over BTC if you've made the leap and decided you want any crypto allocations at all. We've also got likely ETH outflows coming in the early stages after the ETF's launch, just like we did with GBTC. So it's certainly a time for celebration for those who care, but just keep in mind it's all not horseshoes and gumdrops and rainbows and unicorns just yet. So looking at this old thread I put together from 2023, there are a few things in here that I'll talk about, a few more of them. Just in the short term, for ETH, Sunday I talked about it, Monday I talked about it. I didn't take the trade, okay? This isn't cope. This is just, look, this was all on the table before the move happened. The technicals were certainly there. I mentioned that in the video yesterday for a falling wedge breakout. That happened. Okay, cool. Now what? Well, you could just measure the falling wedge. You can measure this triple bottom. You can say we're now back above the cloud with a bullish TK cross. Very clearly an on-volume breakout, which is what you want to see. You don't want to see a plus 20% move. I think it's the biggest move ETH has ever had on a daily candle, on the USD chart anyway. You don't want to see that without volume. We saw tons of volume, so that's great. So the next step in the short term is like, okay, what do you do now? Do you DCA? Do you rush back into ETH from other coins? That's up to you, the individual. The cloud will tell you, it will suggest the TK lines once again are the levels to watch, much like November, we rode the Tenkin, eventually retested to the Kijun and the red later on. Never really touched the Tenkin on the way up in February till the very end. I don't think we see that this go around, but all of the cloud signals are definitely bullish now. So the cloud is giving you its blessing. It was not giving you its blessing before. It's giving you its blessing now, saying from a trend modeling perspective, expect bullish continuation over neutral, over bearish continuation. Much like BTC poked above the cloud a few days ago now, you should expect higher highs. They should not be a surprise. If you are short, you should expect to get liquidated. If you are out of the market, you should expect to have to chase. Okay, this is what the cloud is telling you. This is how trend metrics work. If you want to simplify all of this, by the way, we've got a yearly pivot at 4,000 to deal with after that 4,800. Those are the near-term targets. If you want to simplify all of this, just look at the 1050 cross on the daily. We will get a 1050 cross coming up here shortly. One no-brainer way to play moving averages is also to put bids on the moving averages. This is a dynamic system, so it's going to change over time, right? Much like the Tenkin and the Kijun, very similar type of setup. If you're worried about chasing or buying a 20% candle, just be patient, right? This isn't going to go to infinity without you, okay? So that's near term. Before we talk about long term here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA Kraken. Looking on Kraken Pro, you can also set alerts when you're logged in. You can pop on the cloud. You can go to multiple time frames. All that's well and good. What you want to see here, if you are trying to get in, is weakness. You want to see shooting stars. You want to see anger. You want to see a bunch of people coming who didn't sell in March, who are underwater, to sell at break even or around break even, right? These are all good things. So I wouldn't fret on any of that. If you have a bullish long-term thesis, what do you care what the price is today, tomorrow, next week? If you think ETH is going to 10K, if you think the ETH ETFs are going to have a positive and beneficial effect on price eventually, then you want lower prices, right? So this definitely looks great as far as the cloud is concerned. Zooming way out, if we compare assets just based on market cap, this is a great little website, 8marketcap.com, US equities, global equities, metals. You can see Bitcoin there, number 9, gold number 1 at 16 trillion. Don't trust, verify, always double check this stuff. I'm sure it's off by some margin or degree, but if we're comparing and we think, okay, we think Bitcoin might be going to gold's market cap, that's roughly a 10x. Now, where would ETH go, right? This is a question for you. I'm asking you, the listener, where would ETH fit in this if you think ETH is bullish long-term based on market cap? So ETH is down here at 26, I believe. There it is at, let's say 450 billion. Let's just say ETH catches up to silver. That would be a 4x, I believe, if my math is correct. Based on market cap, not based on price. Is ETH, in your eyes, worth more than the Mag 7? Is it worth more than Google? Is it worth less than Google? You know, like these are questions to think about long term if you're thinking about in 2026, where do we think price is going to be, right? We're already surpassed MasterCard. I think there's another one in here. Most of the banks, Platinum, but it's a fun little thought exercise. Another thing we can do is compare market cap relative to active addresses, total addresses, new addresses. You can do all that stuff. I've done that with Bitcoin in the past. I'll put all these links in the video description. I've done that with Bitcoin in the past, and the one that makes the most sense, the one that has seemingly the most signal to me, is market cap relative to total addresses, not daily active addresses, total addresses. How this Metcalfe's law equation works is the highs in this metric represent overbought territory, lows represent oversold territory or value, excess, however you want to think about it. You can slap a z-score on this thing, you can do all sorts of stuff. But when I look at market cap relative to daily active addresses, this isn't up-to-date data, but even back before the ETFs launched, we were already quite high on market cap relative to daily active addresses. Again, you want to be down here, you want to be at lows if you're bullish, highs if you are bearish. If we look at market cap relative to total addresses for Bitcoin, the signal to me was arguably much better. It was in some ways equivalent to post-COVID, post-halving at that time. So the signal to me on this made a lot more sense. So if we think about that to ETH, I don't have all the other metrics on here to compare, but looking at market cap relative to total addresses, which you can pull from Etherscan, total unique addresses, anybody can create 10,000 addresses a day. They never disappear, okay? That doesn't really matter. To this equation, all you're looking for is, has it told me anything? Is there a signal here at all worth paying attention to? We don't have a decade worth of data, but the data we do have suggests ETH is getting close-ish to an eventual top. It certainly looks closer now than Bitcoin did before the crazy move up, right? Bitcoin's market cap relative to total addresses probably also looks very overvalued now. I don't think this is a great metric to necessarily think about, but it's one way to incorporate the size of the network relative to the market cap. You can see in 2018 how this came way down, and you can also see in 2022 how this came way down. So depending on how you want to think about this, are we overvalued today? No. Are we in the value zone today? Also no. We have a ways to go. We were more overvalued in March than we are now, certainly. And one way to push this equation down would be to add addresses. One other caveat with this, obviously with ETH and even with Bitcoin and layer 2s, anytime you're looking at the network, you always have to think about the layer 2 effect for ETH, Arbitrum, Optimism, all the other ones, right? For Bitcoin, Lightning, what do those addresses look like? It sort of becomes this amorphous, nebulous, impossible to actually quantify task if everybody has all these channels and you're just sending all this stuff all the time anywhere. So it's not a perfect metric, but even still, if we can just compare this cycle to last cycle, we're in a decent spot, right? We're on our way to getting oversold, similar to similar to MVRV or other types of metrics. So we're not there yet. One thing to keep in mind and to look at in 2025 and 2026. Looking at the ETH price chart, the first thing you always want to do in any bear market, any all-time high retest, you always want to measure using fibs the high to the low. Project that higher. This should be your maximum pie in the sky target. It's great because you can backtest this on anything instantly. It takes 2 seconds. Okay, go through Bitcoin. You can do this on every single market cycle. And you can see, was it in the wheelhouse? Was it roughly correct or not? Was it way off, right? For ETH on the last cycle, we didn't quite get to the 1618 of the bear market fib extension, but we were close-ish, okay? So if I had to give a target for this cycle today, it would be roughly, just based on this, 14 to 27, 28. Do I think that's probable? No. But if I was in a coma from today until 2026, and I had to set asks first, I would smatter my asks somewhere between 14 and 28, okay? What might make a little bit more sense is measuring this as perhaps a cup and handle, perhaps an inverted head and shoulders. There's all sorts of options here, right? Shoulder, something, shoulder. None of these are going to be perfect. Keep that in mind, chart pattern purists. Don't come at me in the comments. None of these are going to be perfect, okay? Is this truly a cup and handle? Nah, not really, but maybe, right? So if we measure this high to the low, fib extensions, 8.8 basically to 15. Okay, now this makes a lot more sense to me based on the rest of the stuff I'm going to show you in the modeling. The market cap stuff based on silver, we said 4x. Price here would be what, between like a 2.5x to a 5x, let's say, roughly, something like that, right? So it's in the wheelhouse again. It's in the wheelhouse. As far as trying to time the top, trying to put a calendar time point on where we think those levels may occur, we can add a trend channel. This is a specific type of trend channel called a pitchfork. It has rules. You pick 3 points, gives you a rate of change. The price action in the pitchfork, to me, gives me confidence in the trend channel. So you can draw these on any time frame all over the place, right? But the fact that this one has fit price roughly extremely well for the past 5 years, let's say, that's a great sign that this hidden market force trend channel is how the market has behaved, okay? So if we try to look on this, where are we going to hit our maximum price targets? Just as an idea, it's going to be likely later on 2025. One other thing to keep in mind with pitchforks, price always wants to return to the midpoint. That's where it likes to live. So this blue zone with the yellow diagonal, that would be a high probability target now that we're pretty sure the bottom of this pitchfork has held. Now you can see like 2021, we came way out of this thing and then came back, right? Much like Bitcoin did on its daily pitchfork, came way out and came back. So the next logical step here is to continue in these diagonals and eventually make a journey, bare minimum, to the midpoint of this pitchfork. Now you can draw this a bunch of different ways. It's up to you. It's subjective. I think personally this fit makes more sense than this fit. I know people are going to ask me this, why didn't you use the highest wick versus the wick you used? Well, this is why. One thing you'll notice with pitchforks, typically you find the diagonal on the base here fits price pretty well. If it doesn't, if you get something like this, then I tend to try to find a better fit. Now, if you like this view, use it, right? It doesn't matter to me. You could say, well, this is the overbought zone. This is the oversold zone. Here's your targets, right? We're just trying to roughly model what the heck's going on here. We don't need exact dates, exact time frames. We don't need to say 33K by July, right? We don't need to say that. But you can think of it like that. You can say, well, yeah, by 2025, 13K. By 2025. That sounds insane, but that's possible. Possible. I don't think it's probable. It's possible. Another one I really like is the 2-year moving average multiplier. This is how you pull it up on TradingView, just 2YMA. It takes the 2-year moving average in the green here and then multiplies it by 5. Again, this is about subjectivity. Does this fit? Does this make sense? Has it roughly shown you the highs and lows? I believe it has. It's done a much better job at the highs than the lows. For ETH, for alts, because there isn't a decade of data, you do have to bump it down a bit. So this isn't actually the 2-year moving average. This is the 1-year moving average multiplier. All you do is you change it in the settings in the indicator. So you have the 365 moving average down here. The midpoint in the white is what I've added. And then the red would be the maximum. That's again where we get to our closer to 13K target. I think it's also useful to add the halving dates for Bitcoin onto this just to see how long it's taken ETH post-halving to get to the midpoint. We'll say 3 to 6 months, just eyeballing it. The midpoint on this is 7,500 today. This is dynamic. It's going to continue to move with price. Depending on how you prefer to look at this, you can also look at the 2-day 3 to 65, which would be the 2-year in effect. It would be 730 days instead of 365 days. Gives you a similar target, similar warning signs at tops. It's not exactly completely perfect. Nothing is going to be completely perfect. You're just looking for a rough idea, right? Because when things get euphoric, people think we're going to infinity and we're going to replace the dollar and all this other stuff, right? Usually that's not the case. So this helps you keep a level head on what's going on. This is another popular one. You can add it by searching for ETH logarithmic regression. This, I would argue, hasn't really done so well at the highs and the lows. Thus far, it's done pretty well at the highs. So if you're turbo bullish, you actually want to see this thing get blown out completely. Currently, it's projecting 8K. By the time we get to 10 or 13 or whatever, on the projection, that may make sense. So this may end up being correct, even though it looks like it's wrong. It may end up being correct just like it was in 2018, 2021, 2022. Most of these are going to roughly point to the same place. This is another one. ETH log curve zones. This one hasn't done a great job at calling the top per se consistently. We don't have a lot of data, right? So it is what it is, but it's done a much better job telling you where the bottom was than the top. If it matches the previous all-time highs in the log curve zone, you're talking 16-ish, right? Wherever this ends up projecting. If this just gets to the midpoint, then we're more in the wheelhouse of the other expectations, 10K-ish, eventually, right? But it's done a really good job at sniping the bottoms that have existed. So definitely one worth just peeking at every once in a while. Similar to the Bitcoin rainbow chart, there's also this rainbow chart, which is the same as the ETH log regression, I think, but I'll put this link in the description as well if you ever want to check it out. You can also see the projections into 2025 plus. We're talking 10, 14, right? Unlikely we get to the hottest of the hot zone, the maximum bubble territory, which would be 2022, something like that. What's most likely is that orange level, but have we earned it, as they say on the chart, which is, again, between, we'll just say 10 to 15K, roughly. I think 8 to 13 makes more sense, but 10 to 15, sure. On the fundamental side, the non-technical side, something to pay attention to would also be the Ethereum Foundation sales. None of these data points individually are enough for me to say, okay, that's it. Bubble's over. We're all going home, pack it up. A collective tapestry and amalgamation of all of these data points, right? If we are topping out on all the TA stuff, and then, oh, by the way, we have the ETH Foundation just fire sailing thousands and thousands of ETH, usually a decent sign when insiders are selling. Now, to be fair to the ETH Foundation, they were selling post-COVID a lot. I don't have the actual updated data beyond March on Foundation sales. I couldn't find it on Etherscan or Dune. So if you've got some data for me, let me know in the comments. But definitely another data point to watch on the side. TVL is another one. Not my favorite metric for a variety of reasons. Do we measure this in ETH? Do we measure this in USD? What are we comparing against? Are we comparing against other chains? If we look at this in ETH, it hasn't even matched previous highs yet, which is maybe a good thing. What percentage of the network is this? Do we include staking or not? You know, there's all sorts of questions. So I just think it's not exactly straightforward, but it's an interesting metric to acknowledge that it exists. A lot of this is stablecoins. It's good to see TVL picking up again. Maybe more valuable would be to compare TVL's, Solana versus ETH. Where's most of the money and attention going? If you're trying to play some relative value game, Solana also made a new higher high on TVL recently by the looks of it. Inflation and emissions, always a big part of this, especially when we're talking about where could the market cap go. There's been a lot of discussion about these high fully diluted value coins. ETH and BTC less so a part of that conversation. BTC is obviously capped, ETH is not, but ETH has a burn mechanism. So I'm sure everybody watching this video knows about Ultrasound Money, the website. But if you don't, plenty of metrics here to look at and think about down the line. One issue ETH has had is that it's been this mix of more expensive than other chains, not burning enough ETH, and then being super cheap and no one using it. So that's something to watch. Does that change going forward in the cycle? Do people come back to ETH in a bigger way? Does DeFi pick up? Does DEX volume pick up? Do we start seeing NFT activity on ETH again? These are things to think about down the road. Validators also, I bring this up all the time. I think this is a great metric to pay attention to. This is people locking their ETH up. We have liquid staking, so it's not exactly the same as hard locking it, but it's a good little sentiment gauge. Are validators going up? Is supply staked going up or down? What does the staking APR look like? All those people staking can thank the SEC for not allowing staking in the ETH ETFs. Although that may help price appreciate, it would certainly plummet the staking APR, but that's another conversation. And then as we get to the end of the cycle, 2025, 2026, whatever it is, you will likely see people cashing in their chips, I'd imagine, to some degree. We do have some OG data points on this. This is Dash. These are Dash master nodes over time. Assuming this data is correct, if we add that to a price chart, most of the masternode staking activity occurred up until 2018. Okay, here's the top in 2018. Additional masternodes, which is just, I think it's 10,000 Dash, right, for staking, I think, if memory serves me correctly. That is a huge chunk that is taken off exchanges and whatever else. So the year over year and month over month additions to masternodes really slowed down past 2018, and past 2021, masternodes just came off continuously, right? We've never revisited the peak in masternodes for Dash, which was 5,007. So just as something to think about down the line, I'm not saying ETH validators are going to drop off like a cliff like this, but if they do, I wouldn't think that's bullish. And you can almost use this as a bullish or bearish divergence. If you're seeing continuous validator activity drop off, if you're seeing the queue and the wait time pick up, if you're seeing active validators drop off and prices flat or up, that would certainly be a bearish divergence because you're unlocking ETH. What's more likely to happen is as you're deactivating your validators, you see price going down. So collectively, these are things to think about in the long term. The stuff was always there, to be fair. It's not like, I could have done this video last week or 2 weeks from now. It doesn't really matter, but I know a lot of people are thinking about their ETH bags and getting rich staking, bro. So I thought I'd bring it up again. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.